Now come to the next question based on adjustment of financial statement. Here the trial balance is given in this question and certain adjustment is given. On the basis of those adjustment and information given in the trial balance, we will prepare the trading and profit and loss account and balance sheet. So the question is, the following is the trial balance of Mr. Amar Chand as at 31st March 2016. So trial balance informations are stock on 1st April 2015, that is the opening stock, thereafter purchase and sales, returns, debtors and creditors, bills receivable and bills payable, drawings and capital, cash in hand, balance with the Bank of Tokyo, discount, carriage on purchase, carriage on sales, bad debts provision. This bad debts provision is the old provision which is given in the trial balance. Furniture on 1st April 2015, new furniture purchased on 1st January 2016, rent, salary, commission, repairs, insurance within the bracket, annual premium paid on 1st January 2016. Next is salary outstanding, sales van and sales van expenses. These are the ledger balance which is given inside the trial balance. After the trial balance, just below the trial balance, there are certain information which is given as adjustment. Taking into account the following adjustment, prepare trading and profit and loss account and balance sheet as at 31st March 2016. So informations, there are total 6 adjustment. Number 1 is stock related to closing stock. Number 2, depreciation on furniture and sales van. Number 3, a sum of rupees 200 is due for repairs. This is for outstanding repairs. Number 4 is write off 2000 for further bad debts, that is additional bad debts, and create a provision for doubtful debts at the rate of 5% on debtors and also provide 2% discount on debtors. Next is rent is paid at 1000 rupees per month and allow 8% interest on capital and charge 1500 as interest on drawing. So on the basis of the information given in the trial balance and adjustment, we will prepare trading and profit and loss account. So this is the format of trading and profit and loss account for the year ended 31st March 2016. Financial year start on 1st April 2015, closed on 31st March 2016. So start with the trading account. First information is your opening stock. This is the number 1 information, number 1 given in the trial balance. Also opening stock. Stock of 1st April 2015 is opening stock. So you write directly this amount in the outer column. 62,000. Next item is your purchase. So we will write the amount of purchase in the inner column, 3,15,000. Purchase have a debit balance. Less returns. Returns is given both in debit and credit side of the trial balance. Purchase return have a credit balance and sales return have a debit balance. So return which is given in the credit is purchase return. 2500 is purchase return. So we will deduct this amount from purchase to get the net purchase. So it is 2,12,500. After purchase, here you write the sales. By sales, sales have a credit balance. So 4,48,000 is the sales you see in the trial balance. Purchase and sales is given at one place. The sales have a credit balance. Less returns. Returns here means sales return. The return which have a debit balance is sales return. Return means it's a sales return. Okay. Sales return have a debit balance, that is 3,700, 3,700 sales return. Then write the amount in the outer column after deduction. So it is 4,44,300. 4,44,300. Now come to the next. After return, see the direct expenses. Carries on purchase. Carries on purchase means carries inward. Carries on purchase means carries inward. It's a direct expense. Carries on purchase. Carries on purchase is 1,200. Carries on purchase 1,200. Carries on sales is indirect expense. Carries on sales means indirect expense. It is called carries outward also. Next, related to trading account is your closing stock given in the adjustment. Closing stock given in the adjustment number 1, stock at 31st March 2016. 46,000 is the closing stock. 46,000 is closing stock. So carries on purchase is 7,500 is carries on purchase. This is 3,12,000. 3,12,500. 7,500 is carries on purchase. Closing stock is given in the adjustment. So you will write the closing stock over here. Closing stock given in the adjustment is 46,000 is closing stock. Now we'll do the total. Credit side total reflecting is more. So we'll do the total of credit side first. Okay. 4,90,300. 4,90,300 is total. Now we will find out the difference. 0, 0, 5 and 5, 10, 3, 1 carry, 3 to 5, 5 and 7, 12, 12 and 8, 22 carry, 2 or 8, 9, 6 or 2, 8, 9, 0, 1. 1,08,300. 1,08,300 is gross profit. This is what? This is gross profit carried down. This will be transferred to profit and loss account credit side by gross profit brought down. Gross profit brought down 1,08,300. Okay. Now we have entered into the profit and loss account. Trading account is completed. Here we have find out the gross profit which is transferred to profit and loss account credit side. Now come to the profit and loss account. Here we will write all indirect expenses and losses, and this side indirect incomes and gains. So now come from the top and you see which are the indirect expenses. To discount. Discount is amount is on debit as well as on credit side. So debit discount is your discount allowed. So write the discount allowed over here in the inner column. discount allowed. There is a provision related to discount on debtors, adjustment number 4. There is a provision for discount on debtors. So we will add provision for new provision for discount, new provision for discount on debtors, new provision for discount on debtors. You see, debtors is how much? You see over here, debtors is how much? I am going to do the working note over here, working note, this side working note, working note. Okay, this is working note. So see the adjustment number 4, further bad debts is 2000 and create a provision for doubtful debts at the rate of 5% and also provide 2% for discount on debtors. So debtors is given in the balance sheet is, trial balance is, debtors given in the trial balance is 80,000. 80,000 is the debtor which is given in the trial balance. You deduct the further bad debts, additional bad debts, further bad debts we will deduct it. Further bad debts is 2000 is further bad debts. So after deduction of further bad debts it is 78,000. Now we will deduct new provision for bad and doubtful debts, new provision for bad and doubtful debts. New provision for bad and doubtful debts we will calculate it in this amount 78,000 after deduction of further bad debts. So 5% is new provision for bad and doubtful debts. So we will calculate the new provision for bad and doubtful debts after deduction of further bad debts. It means on 78,000. Okay, on 78,000. So the amount is 0, 3,900 is the further is provision for bad and doubtful debts. After deduction of this amount, the rest amount is 74,100. We will calculate the provision for discount, provision for discount on debtors, discount on debtors on which amount 74,100. Provision for discount on debtors is 2%. 2% of 74,100. 2%. Information number 4, adjustment number 4. 5% is the new provision for bad and doubtful debts and 2% is the provision for discount on debtors. So we will calculate the 2% on 74,100. Okay. So it is 1482. 1482. Is it clear? 1482. So deduct this amount 1482 81627 72,618. After deduction the amount is 72,618. So here you write the new provision for discount on debtors, this amount 1,482. 1,482. In outer column this will be 2804. 4,082. After new provision for discount on debtors which is added to the discount, this is what discount allowed, and discount which is given in the credit side of the trial balance, that is discount received. Discount which is given in the credit side, discount which have a credit balance, is what? It is discount received. So discount received is how much? Discount received is, so the discount received is 3,800 is discount received. Okay, now come to the next. Carriage on sales. Carriage on sales is indirect expense. It is also called carriage outward. Carriage on sales is also called carriage outward. This is carriage outward is 1200, 1200 is carriage outward. Okay, thereafter bad dates. Bad dates is 2400 is bad dates. To this bad dates we will add further bad dates which is given in the adjustment number 4. Further bad dates means additional bad dates, that is 2000 is additional bad dates, this one further bad dates. Then we add new provision for bad and doubtful debts. New provision for bad and doubtful debts. Bad and doubtful debts. New provision for bad and doubtful debts is 3,900. Already I have done the calculations. 3,900. We will add this 8,300, then we will deduct from it old provision for bad and doubtful debts. Old provision for bad and doubtful debts. Old provision for bad and doubtful debts is given in the trial balance, that is bad debts provision. 3,000 is bad debts provision. 3,000 is what? It is bad debt provision. So after deduction it is 5,300. 5,300. Next is after bad debts and provision for bad debts, next item is rent. Regarding rent, one information is given in adjustment number 5. Rent is paid at the rate of 1,000 per month. So per month rent is 1,000, and in trial balance rent is given how much? Rent is given 10,000. It means this rent is of 10 months. This rent is of 10 months. It means 2 months rent is outstanding. Outstanding rent. Outstanding rent is of 2 months. 2 months rent is outstanding, that is 2,000, 1,000 rupees per month. So total rent is 12,000 is total rent. 10,000 is given in the trial balance, and in the additional information it has given that rent is 1,000 rupees per month. It means in a year it should be 12,000. It means 2,000 is outstanding rent. Thereafter you salary. Salary is the next item. Salaries. Salary, regarding salary there is no adjustment, so we will write the amount directly in the outer column. 25,000 salary. 25,000 is the salary. After salary, commission have a credit balance. It means it's a commission received. It's an income. Commission which have a credit balance, that is 2,400 is the commission amount. This is indirect income. Then come to the repairs. After commission another is repairs. Is there any adjustment related to repairs? You see adjustment number 3. A sum of rupees 200 is due for repairs. So outstanding repairs is given in the adjustment. So repairs is 2,300 is repairs. you add outstanding repairs, adjustment number 3, outstanding repairs is how much? It is 200. So total repairs is 2500 is total repairs. Okay, 2500 is total repairs. So rent, outstanding rent 2000, 2 months rent is outstanding, because rent given in the adjustment is 1000 rupees per month rent, and trial balance it has given 10,000. It means 2 months rent is outstanding, that is 2000. Salary is 25,000, no adjustment. Repairs 2300, add outstanding repairs which is given in the adjustment number 3. After repairs, next item is insurance. Is it clear? After repairs, next item is insurance. Insurance is 3600, insurance is given, and in bracket it has mentioned that annual premium paid on 1st January 2016 and account closed on 31st March 2016. It means in this financial year the insurance premium is only related to 3 months. 9 months insurance premium is prepaid. So we will deduct the prepaid premium, prepaid insurance will be deducted. Prepaid insurance. How we will calculate the prepaid insurance? This insurance is for annual. So if you divide it by 12, so this is 300 rupees per month is the premium amount. So 3 months premium is related to this financial year and rest are related to the next financial year. Means from January, February and March is related to this year, and March onward premium is related to the next financial year, that is 9 months. So 2700 premium is related to the next financial year prepaid. This will be deducted. So this financial year premium is only 900 is the premium of this financial year. Next is, after that, sales van expenses. Sales van expenses is how much? It is 6000. Sales van expenses 6000. Okay, now come to the adjustment. Number 1 we have done it. Number 2, depreciation on furniture. Depreciation on 2 items. One is on furniture and another is on motor van. Furniture and sales van. So sales van, furniture and sales van. We will calculate the depreciation on furniture and sales van. Okay. So depreciation on furniture is furniture given in the trial balance. Depreciation on furniture we will calculate. Depreciation on furniture we will calculate in the working note. Furniture given in the trial balance is on 1st April 2015 10,000 and rate of depreciation is 15%. So it is 1500. Another furniture information in the trial balance is 6000 and this furniture was purchased on January. So the depreciation will be for 3 months only, January, February and March. January, February and March, 3 months depreciation. Okay, 225. So total is 1725 is the total depreciation on furniture. Total depreciation on furniture is 1725. 1725. And on motor van it is 20%. Depreciation on motor van, on sales van is how much? Sales van given in the trial balance is 75,000 and 20% of that amount. So it is 15,000. Depreciation is 15,000. So total depreciation is 16,725 is the total depreciation. 16,725. So information number 2 related to depreciation we have done it. Number 3 outstanding repairs we have done it. Number 4 related to further bad debts and new provision for bad and doubtful debts and discount on debtors is done it. Outstanding rent we have done it. Now last information is 6 number, interest on capital and interest on drawing. Interest on drawing will be reflected this side. Interest on drawing, it's an income. Interest on drawings, interest on drawings is 1500, and this side you will write interest on capital. Interest on capital. Interest on capital. Interest on capital. So we will calculate the interest on capital at the rate of 8%. Capital given in the trial balance is 2 lakhs. Capital given in the trial balance is 2 lakhs. So 8% of 2 lakhs is the interest on capital, that is 16,000. This is what? Interest on capital. Interest on capital is 16,000 is interest on capital. Is it clear? 16,000 is interest on capital. So the interest on capital is 16,000. Okay. This interest on capital is calculated on the amount of capital which is 2 lakhs at the rate of 8%, that is 16,000 interest on capital, and this side is interest on drawing. Now we will do the total. Now we will do the total of debit and credit and find out the difference. Credit side is more, so we will do the total of the credit side first. 0, 0, 3. 3 and 8, 11, 11 and 4, 15, 15 and 5, 20, 2 carry, 10, 15, 16, 1 carry, 1,16,000 is the total. 1,16,000 is total. 1,16,000 is the total. Okay. 1,16,000. Now we will find out the difference amount. We will find out the difference amount to calculate the net profit. To calculate the net profit. So the net profit is net profit. This will be transferred where? This will be transferred to net profit, transfer to capital account. Transfer to capital account. Capital account. So difference amount, net profit will transfer to capital account. This side total is 89,707. 89,707 is the total of debit side. So difference amount is 3,920. Okay. 6, 1 carry, 2, 26,200 26,293 is net profit. 26,293, this amount is the net profit transferred to capital account. So net profit is 26,293. Now thereafter we will prepare the balance sheet. We will prepare balance sheet. Now come to the balance sheet. Liability side. First you write the amount of capital. First you write the amount of capital. Capital which is given in the trial balance is 2 lakhs is the capital which is given in the trial balance. You add net profit first, net profit which we have calculated from profit and loss account. The net profit is calculated by us from the profit and loss account, that is 26,293. 26,293 is the net profit. Then you add interest on capital which is given in the adjustment, and we have written in the debit side of profit and loss account as well. Interest on capital, that is 16,000, 8% of 2 lakhs. Thereafter you add it 3,92252, 2,52,293. Then we will deduct from this drawings. Okay, drawings given in the question is in the trial balance, that is 30,000 is the drawings. So we will deduct the drawings. So 39222. Thereafter we will deduct interest on drawings. This interest on drawing is 1,500, 1,500, 1,500. You deduct it and write the figure in the outer column. 3,970,2 lakhs 20,793,000. Okay, 2 lakh 1,500. This is 4. This is 1. This is 1. 2,10,793. Thereafter you see in the liabilities in the trial balance, sundry creditors. Sundry creditors is given in the trial balance. Sundry creditors is 43,000 is sundry creditors. Okay, and thereafter you see bills payable. Bills payable given in the trial balance is 4,300 is bills payable, 4,300. Thereafter you see outstanding salary which is given in the trial balance. That's why it's not an adjustment. This will directly reflect in the liability side of the balance sheet. It's not an adjustment. Outstanding salary is 5,000. Thereafter you see next item is outstanding rent. 2 months rent was outstanding. Rent. It's a 2 months rent. 2 months rent was outstanding, that is 2,000 rupees. Okay, next is your outstanding repairs bill. Outstanding repairs bill. Outstanding repair bill was 200. It was 200. Now coming to the asset side, start with the sundry debtors. In sundry debtors, there are so many adjustment in sundry debtors. Okay, so I am going to reflect all those adjustment over here. Sundry debtors given in the trial balance is 80,000 less further bad debts. Further means additional bad debts, which is given in the adjustment is 2000 deducted, so it is 78,000. Thereafter we will deduct new provision for bad and doubtful debts. New provision for bad and doubtful debts. Thereafter we will deduct new provision for bad and doubtful new provision for bad and doubtful debts. New provision for bad and doubtful debts. New provision for bad and doubtful debts we have already calculated in the working note, 3,900. So we'll deduct it 3,900. Okay, so 74,100. Thereafter we will deduct new provision for discount on debtors. New provision for discount on debtors is 1,482. This will be deducted. After deduction, the amount is 72,618. Next item is bills receivable. It's an assets. Bills receivable is how much? 12,100. Bills receivable. Next item is cash in hand. Cash is given 24,800 is cash. Thereafter next item is balance with which bank? Tokyo. Balance with Tokyo Bank means bank balance. Bank balance is how much? 32,800 is the bank balance with the Tokyo Bank. Next item is furniture. There the two furniture is given. One furniture of opening furniture and another is purchased on 1st January 2016. Additions were on 6,000. So total furniture is 16,000, and in this amount we will deduct the depreciation, and the calculation of depreciation we have already done it in the working note. 1,725 depreciation, and we'll write the rest amount in the outer column. Okay, rest amount in the outer column 14,275. Thereafter sales van is 75,000, and we'll deduct the depreciation from it, less depreciation, that is 15,000. We'll deduct it, and in outer column we'll write 60,000 is the book value of sales van. After that closing stock is given. Closing stock is 46,000 is closing stock, 46,000. One more item which is left here, that is prepaid insurance. 9 months insurance was paid in advance. Prepaid insurance prepaid insurance. Prepaid insurance was 2700. It's a 9 months insurance premium was paid in advance. Paid in advance. Now we'll do the total of both sides. Now we'll do the total of both sides. And this total must agree or tally. So the total of both sides is 2,65,293. 2,65,293. 2,65,293. 2,65,293 is the total. When you do the total will be 2,65,293. So this is all about the balance sheet. So all these items are clear. Capital, add net profit, add interest on capital, less drawing, less interest on drawing. So this is the closing capital. Thereafter sundry creditors, bills payable, outstanding salary, outstanding rent of 2 months, outstanding repair bills. This side debtors, less further bad debts, less new provision for bad and doubtful debts, less new provision for discount on debtors. This is the net amount, realizable amount from debtors. Bills receivable, cash, balance with the Tokyo Bank, furniture, additional furniture, now 16 it is, depreciation thereafter, and the net book value of the furniture is 14,275. Sales van is 75, less depreciation, closing stock and prepaid insurance. Now you do the total of both side, total must be matched. So both side total is 2,65,293. Okay. So balance sheet is prepared on which date? As at 31st March 2016. This side is your liability side and this side is your asset side. Is it clear? This is your liabilities. Left hand side is your liabilities and right hand side is your assets. Whether assets is current assets, liquid assets, fixed assets or investment. All assets will be reflected in the asset side, and the liability side, whatever the amount which is due, which will be paid later on, that is your liability. Okay.